NIO stockholders, prepare for this. There is a piece of great news for all the NIO stock investors. Usually, Chinese stocks are not held in high positions due to many reasons, like corona or geopolitics. The Chinese government crackdown in every sector nearly spooked investors. Whether it's real estate or tech company stocks, everything is in recession. So, what is something that can ensure investors invest in Chinese companies? Why, there is a new beacon of hope for electronic vehicles investors. And what are the things you need to consider before buying in? Hello, everyone, and welcome back to Stock Market News. Today, we're talking about why NIO stock investors should be ready for something new. Are you ready to know? Without any further delay, let's get started. Please make sure you hit the bell icon too so you don't miss out on any new updates from our channel. EV makers and Chinese stocks generally aren't held in high esteem by investors at this instant, and there are a pair of fine reasons for that. For one, the Chinese crackdown on nearly every sector within the economy, and therefore the phrase common prosperity, are spooking investors. With an increasingly assertive government in China inserting itself into the affairs of companies, Chinese companies face uncertainty and achieve a lower trust score within the market. Two, the Evergrande debacle added to promote fears that the Chinese assets market is primed for a significant recession. This might potentially be a giant problem for markets because Evergrande has amassed $300 billion in debt obligations, and a default would have major repercussions in China, and sure would spill over to other markets, including the U.S. Although many risks are included in the market, these are slowly eradicating. The Chinese EV maker lowered its delivery guidance for the third quarter thanks to persistent supply chain challenges and said it'll deliver 22,500 to 23,500 vehicles. The guidance was lowered after NIO delivered but 8,000 vehicles in July and fewer than 6,000 in August. Both Li Auto and XPeng, which are a part of the identical industry group as NIO, saw stronger year-over-year vehicle growth rates thanks to unresolved supply chain issues and negative consequences for NIO's commercial performance. NIO's micro problems added to selling pressure on the stock. However, I think NIO is past a tipping point in September, and both micro and macro risks will get resolved with time. The most important cause for optimism will be found in last week's release of NIO's delivery figures for April. Although its deliveries dropped somewhat in the beginning, slowly they surged in September with a huge margin. NIO delivered 10,628 EVs globally last month, showing a year-over-year rate of 125.7%. Global deliveries marked a record for NIO, meaning the firm, at no point in its history, has ever sold as many EVs as it did in September. Within the table, I'm comparing the delivery growth rates for NIO, Li Auto, and XPeng for August and September. Its low delivery got used as an excuse to lower its value. By that very same logic, NIO's valuation should increase materially again now that the EV maker reported the very best EV deliveries volume in September and posted the biggest month-over-month volume increase for all three Chinese EV makers. The 81% volume rebound in September indicates that the worst of NIO's production problems are behind, which is additionally supported by Q3 21 total delivery numbers surpassing NIO's guidance. NIO's projected a Q3 21 deliveries of 22,500 to 23,500 vehicles, but the EV maker ended up delivering 24,439 EC6s, ES8s, and EC6s, which is nearly 1,000 more vehicles than NIO's top guidance concerned. I expect continued upward momentum in deliveries within the fourth quarter because the chip supply crunch is easing. Ford and Volkswagen China both see an improved flow of semiconductors within the last half year, and Taiwan's semiconductor manufacturing company also argued that the availability shortage has likely moved past its low. My delivery estimates for the ES6, EC6, and also the ES8 is included in the following table. I don't believe that NIO is ready to surpass 100,000 vehicle deliveries this year, but the firm should crack this barrier next year. NIO's deliveries will still grow rapidly, not only due to strengthening demand for existing SUV models in China, but also because the EV maker will debut its first sedan, the fully electric ET7, in fiscal year 2022. NIO has also begun deliveries in Norway in September, which can raise sales going forward. It's not a coincidence that NIO has chosen Norway as its first overseas target. Norway has the very best EV adoption rate in the world, meaning NIO can hit the bottom running with its existing all-electric SUV lineup. Because of the rebound in delivery growth rates in September, I feel NIO's commercial revenue growth prospects are significantly undervalued. The EV makers predicted to process revenues of $9.4 billion next year, showing year-over-year growth of 67%. Revenue estimates have increased lately, partly because the market expects the semiconductor supply shortage to ease in FY 2022 and EV industry growth to return. NIO's PS ratio has been discounted 30% since July. NIO picked up an upgrade from Goldman Sachs yesterday, which calculates a good value of $56. NIO stock is rallying to begin the week, and there's not only one reason, but three. NIO stock was up over 4% in early trading on Tuesday, while futures on the S&P 500 and Stock Index Industrial Average had both fallen by about 0.4%. The first reason is that NIO has been recruiting within the U.S., which would result in production and sales in America. That isn't the primary report that the EV company has been seeking to rent with the U.S. Deutsche Bank analyst Edison Yu tracked down postings on LinkedIn. This doesn't seem to be the foremost significant move driving NIO stock. A second reason for it is China implementing a tax cut for new car purchases, which will be effective from June 1st into the tip of the year and apply to vehicles priced at but about $45,000. That appears likely to lure the complete auto sector, including the EV makers. And additionally, Citigroup analyst Jeff Chung wrote on Tuesday that the Shanghai government was implementing several things to spice up the local economy, which has been hurt by weeks of stringent lockdowns to fight COVID-19. One of the measures could be a subsidy of $1,500 for drivers who move from a conventional car to an electrical vehicle by the tip of the year. NIO didn't immediately reply to asking for a treat on its plans for the U.S. market or the tax cut and electric car subsidy in China. It's not just NIO that's profiting from reasons 2 and 3. XPeng shares were up 4.1% in pre-market trading. Li Auto shares gained 4.9%. Coming into the week, all told, all three companies have been badly beaten up, with a median loss of about 42% up to now this year. Investors will get an opportunity to listen to NIO management about tax cuts and subsidies furthermore, as overall EV demand and production trends soon. The consensus view on Wall Street is that the corporate will deliver a loss of 14 cents a share from about $1.47 billion in sales. Within the fourth quarter of 2021, it lost 17 cents a share from $1.56 billion in sales. NIO delivered almost 26,000 vehicles within the half moon of 2022, up from about 25,000 within the fourth quarter of 2021. There are many risks with NIO, but the case is improving. While it's true that the semiconductor supply shortage can impact NIO's factory output in fiscal year 22, the rebound in September delivery strongly indicates that the worst is behind NIO. A bigger challenge for NIO, as I see it, is the persistent hesitance of non-Chinese investors to shop for China-based stocks. The market has good reasons to be distrustful of Chinese stocks, but I think that strong growth prospects will lure investors into the market. However, slowly delivery growth or a deteriorating supply situation regarding the chips would likely hurt prospects for NIO stock again. If slowing sales growth was a reason to sell NIO, then returning sales growth should even be a reason to shop for NIO. NIO's Q1 22 delivery numbers, which were above guidance, give investors all the explanations they have to reconsider NIO as a stock. And that's going to do it for today's video, guys. We sincerely hope you enjoyed it. If you did, please click the like button and share with your friends and family. And don't forget to subscribe to our YouTube channel, where you'll see even more of our incredible videos. Don't forget, you can also check out our other videos that have been specially selected just for you. We'll catch up with you in the next video. Thanks for watching.